Good morning, everyone, and welcome to another episode. Today, we're going to talk about net and what I look for as far as if the market is potentially set up to short something, what is it that helps me identify the possible short? And this was the best example that I could think of. As you can see here with net, we have a two up for the year, a two up for the quarter, and a two up for the month. Now, one of the interesting things about this is that you can see how we have gone two, 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 two for the month here. So we're getting, in my opinion, pretty extended because that is 5 months of continuous running. And eventually, eventually a stock has to rest to come back down and then go back up. And since these three time frames right here are all two up, we can go ahead and eliminate these three time frames. Where is my next focus? It's right here on the week. And anything below 164.53 here is a potential trigger for me to go short. And you can see that marked down here on the day, 164.53. So here's the rule that I follow, and it's just my rule, okay? And you can do whatever you want with it. But going into a short, there is a time and there is a place to short. And for some of you, that's on an intraday chart. That's a very quick trade. But you also, if you work at it, you can learn how to swing these short trades to the downside. And believe it or not, it's just like going long. It's just you have to have a little more patience in order for the trade to work at times, because it seems like whenever you decide to go short on a stock, that's the moment they decide they want to buy it, right? Or at least that's the way it feels. And one of the things that I would tell you is that you need to find a comfortable position to sit in these shorts and to learn that the market isn't out to get you. It really is just the same price action to the downside. So you can see right here on the week, we have this 222 reversal set up, and right now we are in force. Anything below 164.53 is in force. So what I like to do is to mark where the potential target could be based upon the strat, which would be 130.10 here. Or as many of you know, I like to trade back to the 10. Or if you look at the daily here, we also have this gap from earnings that I could trade this back into. Now the goal is to never ever have this thing reverse on you and blow you out of the water. And I have learned that the hard way. Like I said, there's a time and there's a place to short. But if you're very, very protective, you could put your stop right here at 170.38. And I know for some of you that's a lot of space. That's okay. You know, you got to get used to it, or you could put it right here at 168.72. But the nice thing about this is that going into the week, you had this 2-2 reversal set up right here. Now, for some of you, you like to mark 50%. What I like to do, I like to take the first trigger down on the day. So the moment this thing went 2-3, my first trigger on this was 171.76. Now remember, when you're trading the strat, the smallest time frame will always trigger first. It will always trigger first. Has to. So if you're just using these 5 time frames right here, you took this trigger and you put your stop right there. And now you're starting to get paid for this trade. But that's how I prepare to possibly take a short. I know it's not for everyone. And quite honestly, if you haven't learned how to go long, you shouldn't even learn how to go short, because chances are that's the best way to blow up your account. All right, I hope this video helped. If you have any questions, please comment or let me know. Until we meet again, we'll either see you in the Discord or we'll see you here. So take care.